What's up traders, welcome to Failure to Displace, and this morning we're going to take a look at today's London session, which was very frustrating unfortunately. I took a loss on EURUSD. We had the unicorn model present itself both on Euro and the pound. 50-50, flip of a coin. I decided to go for the Euro. It tagged in a little bit sooner and unfortunately resulted in a loss for me, whereas the pound trade did play out perfectly. I want to jump into the analysis now and just see if there's anything that indicated the pound was potentially a better trade than the euro trade and try and eliminate that kind of issue moving forward. Let's jump into the analysis now and compare these two entries. Before we jump into the analysis, let's review our trading plan just to establish exactly what we are looking for in this morning's session. So first of all, we're going to establish our daily bias, looking at where price is delivering from on the daily time frame. Are we moving from internal liquidity to external liquidity or vice versa? Once we've established our bias, we're going to drop to the 1 hour, looking for our hourly points of interest. This is going to be marking out swing highs and swing lows, and then our hourly PD arrays, specifically fair value gaps and order blocks. Once we enter a point of interest, we are then going to drop to the 5-minute time frame, looking for our 5-minute unicorn model. We're trading the London session 2 AM till 5 AM this morning. I'm only going to allow myself to take one trade per day. This unfortunately resulted in a loss, as we already know. I'm not trading during red news, but I will allow news to act as a catalyst. This is something that does come into play this morning, so there's red news on the pound. My stop loss is going to be 3 PD arrays plus the spread, and take profits are fixed 1 to 2 RR, and we're not incorporating any trade management today, so it's literally going to be a win or a loss, not moving stop losses to break even, and I'm not taking any partials. And the pairs that we're looking at in the London session are EU and GU, which, as I mentioned earlier, both presented setups for us. And so we'll analyse each of those. Now before we jump into the analysis, please do me a massive favour and drop the video a like. Potentially leave a comment down below as well if you took one of these entries. It'd be great to get your feedback and also help me spread out the video. So thanks for smashing the like button. Let's jump into the analysis now. So here we are on EURUSD on the daily chart. The first thing I want to point out is that we have red folder news today on the pound. So at 2 AM we've got claimant count, red folder news for the pound. As the pound and the euro are directly correlated, any major news on the pound can affect the euro as well. So it's worth noting that this could drive the euro if we are trading that. We're obviously looking at both pound and euro this morning, so straight into the open we're aware that we've got red folder news. This could act as a catalyst to the trade that we establish. So on our daily time frame, we can see that we are still delivering from this bearish fair value gap. We took out relative equal highs. We failed to displace. We've closed back into the range. Because we're back in this range, I'm looking at this as the ultimate draw on liquidity. So we've got quite a drop to come and sweep out this sell side. We have engineered swing lows in this area. So we could potentially deliver from this internal liquidity, this bearish fair value gap. We need to be aware of this sell side liquidity and this sell side liquidity. This sell side liquidity here specifically is very close to an inefficiency here, so a bullish fair value gap. So swing highs and swing lows that form into or just above fair value gaps are generally a significant draw on liquidity. So I'm very conscious of these two here. What I am noting as well is that we have created relative equal highs inside this bullish fair value gap. This bearish fair value gap, sorry. This was a sweep of the high. So on Thursday, we did sweep the high and then pull lower again. So this was a liquidity sweep. So as well as delivering from a bearish fair value gap, we did sweep a swing high and then come lower. We have engineered liquidity here essentially. So I am monitoring this, I am aware of this. We're coming into this, my thesis is that I have a bearish bias because we're delivering from a bearish fair value gap and we should be seeking some kind of liquidity now. Swing lows, which could be here, here, or ultimately down here from December. So going into the session with a bearish bias. Let's drop to the hourly time frame now. Price action coming into our London session. So our London session starts at 2 AM. Obviously very large bearish displacement overnight into the Asia session. So this does add confluence to the bearish bias. We're already seeing bearish displacement now. So a drive through Again, with potential red folder news coming at 2 AM, which could drive us even lower. So we need to be aware of our bearish PD arrays. And these will be our points of interest for potential short positions. So we've got a bearish fair value gap at this point. Our closest swing point is right up here before this displacement, which is buy side liquidity. So I wouldn't want price to retrace that far, to be fair. Taking out the daily high. So I'm looking for it to catch a continuation here. And we can see currently at 1 AM, we're delivering from a bearish fair value gap again for a potential continuation. So those are our 2 points of interest. We've got no swing points to look for until right up here. So we're looking at delivering from fair value gaps, which we are currently 1 AM delivering from this bearish fair value gap. So let's drop onto the 5-minute now. And on the 5-minute, as we are coming from this bearish fair value gap, let's mark out our market structure and establish where our breaker block would be. So we have a swing high here down to a swing low. We then have this swing high, which leads to this swing low. So this is the low that's taken. Sorry, this is the swing high that leads to this swing low being taken. And then we have a break of structure higher. So if we are expecting to deliver from this bearish fair value gap and break down, we would be delivering from this area here. So these consecutive down closed candles, 1, 2, 3, would be my bearish breaker block. These are the origin of this swing high, which swept liquidity, which if this fails would be the breaker block looking for a continuation lower. I'm going to highlight these down as our major order blocks. So this is the order block that generated this move higher. So as it stands, if we are bullish, this should act as support to have price continuing higher. However, if we deliver from this hourly fair value gap through this order block with displacement, then this would confirm our unicorn short position. The issue that I've got at the moment is that the New York Open is here. So that midnight open, sorry. Midnight open is just here. If we're taking shorts, we really want to be shorting above midnight open. The breaker block is going to be below midnight open, very close to this sell side liquidity. So obviously we are very, very low down in the range at this point. However, we do have red folder news, as I mentioned, which could be a catalyst to take us down to that ultimate target, that swing low that we highlighted on the daily. So let's go through price action now and see what we are offered. I'm just going to make a note here, relative equal lows here that we've generated. And our session is just about to start. 2 AM, red folder news on the pound. So again, we get a little tap of that hourly fair value gap and it's respected. Price is rejecting. Moving away, displacement through the order block. So we've had a break of structure at this point. We've closed through the order block, so we want to see a fair value gap generated inside this order block now. This order block is going to be now flipped to a breaker block. If we see displacement, a fair value gap inefficiency in the breaker block, that is our unicorn, which we get at this point. So we have a bearish fair value gap inside a breaker block. News driver is driving us lower. My entry would be a touch at the bottom of the breaker block. Stop loss is going to have to be above the high. So we're going to be covering the breaker block. We're going to be covering the fair value gap. And then also I'm going to be covering, we've got a bearish fair value gap here, but ultimately I'm looking at this order block. So I want something that's going to give me a bit of breathing space. We have this consecutive up closed candles here, which are a bearish order block. So we want our stop loss above the high plus half a pip for spread. So we've got a 9.5 pip stop loss, targeting 2R fixed risk reward. That's the trade. Issues of concern obviously are that the short is below the midnight open and we've just swept this liquidity here, so we've just taken sell side. However, following the plan, that would be the entry, and we can see price comes back, taps in the entry, immediate pullback into the range, and ultimately stops out very, very quickly, so we don't even get into profit on that trade. Let's jump it into the pound now, compare these setups, and then we'll just see if there's any differences that could have led us to making a different choice and taking the pound trade as opposed to the euro trade. So here we are on the daily time frame on the pound, just to see if we can establish our bearish bias again. Swept liquidity, so we've taken a swing high. Taken a swing high, pulled back into the range. We did leave displacement at this point, so we've got a bearish fair value gap. Potentially an inversion fair value gap, so we do need to be aware of this. We created relative equal highs in here. So again, we had a sweep of liquidity on Thursday, again a sweep of liquidity on Friday, and a bearish close into this area. This is giving us a bearish bias. We have swept liquidity, so we are delivering from external liquidity. So we will be seeking internal liquidity. We obviously have the inversion fair value gap to be aware of, which is potential support. Swing lows. Down here. And down here. Because I'm bearish on the euro, it makes me, again, more lean towards a bearish bias on the pound because they are directly correlated. And we have a swing low inside the inversion fair value gap as well, so potential pull down. We can see yesterday we had a volume imbalance coming down. That's quite bearish. Leading price action down. So again, I'm leaning bearish because we've swept liquidity and we have failed to displace above these equal highs, so we're back in the range. So we're going to be seeking some form of inefficiency or sell side liquidity before we potentially go higher. So I've got a bearish bias on the pound as well. Let's drop onto the hourly time frame. So here we are on the hourly time frame. We can see that we are coming into the London session, closing below this inversion fair value gap. So this pink area is the inversion fair value gap that I highlighted on the daily time frame. We're closing below 50% of this, so we could be potentially flipping this again into a actual bearish fair value gap to act as resistance instead of support at this point. I'm going to delete it, clean the chart up. We can see we're leaving bearish displacement again, similar to the euro. Price has been displacing lower overnight, so we've got a bearish fair value gap at this point. Smaller bearish fair value gap just above us. And then swing high, our next swing high is not until after the New York. In fact, is that a swing high? We have a swing high there. So right at the midnight open, at the 5 o'clock changeover, we do have a swing high for buy side liquidity at that point. We can see prior to the London session opening up, we have swept a daily low. Here we are now on our 5-minute time frame with our hourly levels marked out. And this here is one of the reasons why I love doing these daily session reviews, because I've just realized in hindsight that this pound trade wasn't a valid setup for my trading plan. My trading plan requires me to establish my daily bias, which we've got a bearish daily bias done, but then I need price to interact with an hourly point of interest. So what I need for a valid entry is I need price to come back and interact with this fair value gap, or to take out an hourly swing high. Obviously, as we established, we haven't got an hourly swing high in this price leg. So I need price to come into this fair value gap and then give me the unicorn entry. As we begin scrolling through price action now, we can see that the news drops at 2 AM. We get instant displacement down. This gives us a unicorn entry based on these down closed candles here. Let's have a look. This is the breaker block, sorry. We'll just establish our market structure. So we'll come from a high to a low, lower high, lower low, lower high, and then this isn't broken. So this is actually the lower high. So this is the candle that breaks market structure. And then we go through. So the origin of that move is here. So this is the swing low that created the swing high that then failed, which means that these two down closed candles are our breaker block. So price clearly on the news driver, which was really good price delivery, created a displacement candle and inefficiency in the breaker. So this is a unicorn entry. However, it's not part of my trading plan because we had no pullback into the range. So we were trading well below the Asia low. So I was very frustrated initially that I took the trade on the euro, which ultimately ended up being a stop out when I was going to initially take the trade on the pound. My entry was going to be here on the pound, stop loss just above this high, basically the same as the euro, so a 10 pip stop loss. And then targeting our 2R. This wasn't a valid entry. So actually, in hindsight now, I've realized this wasn't a valid entry. So my error potentially was getting too impatient to jump into price action when this wasn't a valid unicorn model for me. We can see that price does come back. One of the things that I like to see here, which is something that would lead me to think that the pound trade is a better setup if we had interacted with an hourly point of interest, is that we did create this long wick, so we've already generated a target to go for. So price has already shown a willingness to come down here, whereas compared to the euro, we didn't get that. So price comes back. We've generated relative equal lows at this point, so now there's even more of a reason for price to come down. This is the point where I got tagged in on the euro, so my entry was at 225, I believe. Pound then comes back into the entry, into the fair value gap. Ultimately, doesn't threaten the stop loss. So this top up closed candles, these are our final order block, the last line of defense. We're repelled by that. We never close above 50% of that order block. And then price ultimately begins displacing down towards the engineered liquidity that we've created here. So this is the benefit. If we compare the two side by side, we'll see there's no engineered liquidity on the euro. So we can see, looking at this, the euro had a small wick down. We didn't engineer liquidity at the bottom. The entry on the euro was obviously straight away at 225. 225 here. The pound was still consolidating at the low. I think that the pound showed more of a willingness to come lower than the euro, but this wasn't a valid entry. So despite this actually playing out as far as the unicorn model goes, this wasn't part of my trading plan. I was very frustrated initially, but looking back on this, I actually feel better about the situation now. I chose the right pair. This was a legitimate unicorn model that I was expecting after tapping the 1 hour fair value gap. On the euro, we didn't even threaten an hourly PD array on the pound. We just melted due to the news. We can see that the bias on both pairs was correct. So the bearish bias was correct, so I'm happy with that. The euro does eventually follow suit. Nice displacement lower. Potentially again another unicorn model here. So we had these down closed candles. It led to a high and then led to a low. So these last three down closed candles are a bearish breaker. We've left the fair value gap just at the bottom of it. So if I'd have been more patient and not rushing in straight after the entry, I could have seen this displacement, which gives more confirmation. However, I believe, I wasn't at the screen at this time, I walked away because I was frustrated. Stop loss above that high. I don't even think that this gets tapped on the euro. Thought it got tapped then, no it doesn't. It comes back into that fair value gap and then displaces away, targeting lower prices. There's no point in even looking at that because that wasn't an entry. And that's where we are at current prices. So we've taken our levels of liquidity that we'd highlighted, swing low, rebalance that wick. And the pound, not a valid unicorn, so I'm actually not disappointed that I missed that because it wasn't a valid trade. It is currently consolidating and hasn't taken those swing lows that we highlighted. It hasn't rebalanced, so the euro was the weaker of the two pairs. So really, in hindsight, looking at this, I didn't do too much wrong, in all fairness. Yes, I failed to fully follow my trading plan on the pound, thinking that I should have had an entry. We hadn't interacted with the 1 hour point of interest that I'd highlighted. So I did take the right trade. It was a valid entry. Unfortunately, it just didn't play out today. One of those things, lesson learned. This again is one of the reasons why I do these review videos, so that I can pick up on things such as this, find my faults, log them, explain them so I better understand them, and then hopefully I won't make this kind of mistake again. My final thoughts before I close down the video is that I think I need to work on my patience still and wait for the absolute A+ setups. So even though this was a valid entry as far as my model goes, the unicorn model did present itself on euro. It's really not an A+ setup. The trade entry was below midnight open. If you're taking sells, you really want to be in a premium of the day. We are definitely selling below a premium at this point, and we had just swept a daily low, a previous daily low as well. So we were shorting at the very, very low of the range. So ideally, we would want a much better pullback into a premium before taking that short. So it probably would have been a better idea to have pulled a fib from our swing high to our current swing low, and then start looking for a retracement into this fair value gap above 50% before we start looking for entries. Because I'm only taking one trade per day, I think I need to be more critical about the entries that I do take. We were trading right at the low of the range. I could have just held off this instead of taking the loss because now I'm out of the market for the day. There may be a really nice setup on NASDAQ in the New York AM session that I'm going to miss out on now. So I could definitely have stayed out of the market, just watched on the sidelines and logged this instead of taking that entry, and then just waited patiently for the New York AM session just to see if we get an entry on NASDAQ. So that's the one takeaway, I think, is I still need to work on my patience and don't worry about having to take a trade every single session every time I'm at the screen. Anyway, I hope you found the analysis useful. I hope everybody learned something. I know I did. It was definitely worth coming back and reviewing this trade. If you did enjoy the video, please be sure to give it a like. It'll be a massive help and I'd really, really appreciate it. Leave your comments down below as always, and if you've got any questions, I will always do my best to try and answer them for you. And please consider subscribing if you're enjoying the content. I'm dropping these kind of videos more or less every single day, or at least every day that I take a trade, just as part of my journaling process. Again, thanks for watching, and I hope to see you again in the next video.